Steve Leisman joins us this morning with a very special guest. Morning, Steve.
Morning, Carl. Yeah, I am joined here at the American Economic Association annual conference by Raphael Bostic, the Atlanta Fed president. This is in your district, so you come and you have a variety of duties here that you perform.
Yeah, this is a busy conference for me, and but it's really good. You know, we haven't done one in person for so many years, so it's nice to see some people.
Let's talk about the jobs number this morning, 223,000. I guess the most important thing is, does it change your outlook at all on the economy?
So it doesn't really change my outlook at all. You know, I've been looking for the economy to continually slow from the strong position it was at in the summertime. And this is just the next step in that. You know, the question for me has always been, like, how fast is it going to slow? And it's going incrementally. It's steady. It's not super disruptive. But because of that, it really says to me, you know, we got to stay the course. Inflation is too high. We need to reduce those imbalances so that it moves more rapidly toward our 2% target.
You could look over at the separate household survey on unemployment rate at 3.5% and think, and the job market's getting tighter.
So you could make that argument, and, you know, I'll just say in Atlanta, it is rock solid. And throughout our district, we're hearing that people are not having a hard time finding jobs, and that employers are still, like, pressing to get more people to come to work for them because demand is still strong. It's stepped back a little bit from where we were in the summertime, but there's still a lot of tightness.
What about the wage numbers? They revised away that massive gain in November, and you had a smaller wage gain in December. Did it make you more confident that wages will not be driving inflation?
So, you know, we've heard through the entire episode, through this whole pandemic, that wages have not been the driver of inflation. It's really been on the demand side and not being able to meet demand. And when I talk to employers, they tell me, you know, we're setting wages with the expectation of where we think prices will be in the future. So wages are not driving the dynamic right now, but it is definitely something we got to keep an eye on because historically that's been an important driver. And I want to make sure we're on top of this so that if things change, we know about it as soon as possible.
What has to happen? Does the unemployment rate have to rise, and how much does it have to rise in order for you to be more comfortable that inflation, the job market will not be the source of inflation?
Well, I think inflation is that unemployment is going to rise a little bit. You know, we have to do our summary of economic projections submissions. Mm-hmm. In my submission for this year, I have unemployment moving from about 3.7% to 4%. So a slight increase, but not huge numbers. And I think it's just going to be the byproduct of the economy slowing down. At some point, we will absorb all of those excess jobs, and the slowdown will take in some of the jobs that are currently out there.
I want to get to your summary of economic projections as well, but does that mean you don't see us having a recession if unemployment only goes to 4%?
That's not, recession is not my baseline projection. And, you know, as we see today, there's still a lot of momentum in the economy. There's a lot of energy that can absorb the more restrictive policy stance that we have. And so I'm not really expecting there to be a recession. And if there is one, it will. My sources are telling me it will likely be short and shallow.
In the SEP, you also forecast the Fed funds rate, and it's probably not a bad bet for me to say, are you one of the folks that are above 5% for 2023?
I am. And
17 of 19, so it was not a bad guess on my part.
You do good math there. That's very good. You know, I have us, my projection has us somewhere between 5 and 5.25, and that range. That's the range that I think we need to move to. If the economy proceeds as I expect, which is a continual gradual slowdown like we've just seen in the numbers today. And then what I think is the most important, actually, is just to hold there and stay there and let that policy stance really grip the economy and just make sure that the momentum is fully arrested so that we get to a place where demand and supply start to become more into balance and we start to see those pressures on inflation really come down.
Do you stay there through 2023 and into 2024?
Yes, so that's exactly right. I have, once we get to a number, I want, if the economy continues to proceed as we expect, just to stay there and hold it. And, you know, for me, my projection, I have us holding it well into 2024 because I think that we should just wait and see. And I don't think there's a lot of urgency. There will not be a lot of urgency once we get to that level to step back.
So, again, doing some math on the fly here, if you're at 438 now and you want to get to 5.25, you have about another 75 basis points. What kind of increments do you use? Can you see going 25 basis points at the next meeting, or is it better to go 50?
Well, I think the data will guide us. You know, the thing that I think is the most important is that we're stepping back from that 75 basis point incremental jump. I think that's fully appropriate as we get more into the restrictive stance. Today, I'd be comfortable with either a 50 or a 25. And if I start to hear signs that the labor market is starting to ease a bit in terms of its tightness, then I might lean more in the 25 basis point position. The other thing I would say is I heard a lot from businesses toward the end of last year that the results from the holiday season were going to be an important marker as to where they think the economy is, how strong they think it is, and how they're going to approach it. We haven't gotten all those numbers yet, but I'm expecting that as we see more there, we'll get a clearer sense of how the economy is, and that will help me.